There are so many types of savings accounts out there, aren't there? So if you're wondering what are the different types of savings accounts and which is best for you, then this video's got you covered. Now at the end, I'm gonna share with you my favorite account that allows you to earn higher interest without paying taxes on it. So buckle up, hang on, because it's gonna be awesome. All right, number one, I'm gonna start with the easy one, bank savings. Bank savings, if you've been living under a rock, you might even still know what this is, right? Bank savings is just a savings account you get through the bank. Very simple, easy to do, easy to access because you can just walk in, pull money out, unless the bank tells you that you can't pull the money out, that's possible, but you can be able to pull that money out whenever you want. Now, the thing is, you're gonna earn like nothing. It's like point nothing percent, right? It's just miserable. Sometimes I know my bank had paid me 0.05% for the last few years. That's horrible. That's nothing. And then I get taxed on 0.05%. If that's not bad enough, I take nothing home, don't I? It's almost taking my money for free. But the nice thing is, the savings account, it does allow you to have a little bit more discipline. Because if you just had it in a checking account, what's the temptation? You're gonna wanna spend it, right? But by putting it into bank savings, it does allow you to at least set it aside, earn something, even if it's almost nothing. And it's a good way to kind of have that peace of mind, that safety, knowing you have some kind of emergency fund in there. But I'd tell you, this is my least favorite of bank savings accounts, but at the same time, it's got a great purpose and we still have it. We still have it for at least that emergency that we need to walk into the bank that day and pull the money out. So that's what a bank savings account is. And number two, and this, I'm kind of going pretty close in order to my favorites here, although number three is not so much my favorite, but number two, online savings account. If you want to earn a little slightly more than point nothing percent, where it's a little bit more than point nothing percent, that's an online savings account. Now the nice thing with an online savings account is that it does pay a higher interest. Sometimes it can be 7 to 10 times higher than whatever you can get with the bank. Why? Well, because they're not having to pay that teller to take care of all your deals and all your troubles, right? They don't have that problem. They don't have to deal with the building and everything else. They just house it online. Now, it does take a day or two for that money to go to your bank if you want to transfer it to a local bank and cash it out. But the nice thing is that it can be transferred back and forth between your bank. So very easy to use, better returning than you get with a bank savings account. But again, it's not going to get you rich, right? For example, like I had mine that my highest one just got up to 1% finally, after it was around 0.5%. Now back in the day, I remember like 2005, I remember some of these online savings accounts paying 5% a year. Now that was a time when the bank was paying me around 1.5% on my savings. So that was a long time ago. We haven't seen those days for a very long time, but they could come back again. But online savings accounts, again, you don't get rich, but it's nice to have money to store there. So with my family, we'll have a little bit of bank savings we'll go into, but we'll keep a little bit more in online savings so we can at least earn a little bit better money, but quickly transfer it over to our bank account if we need it. Now number three, it's kind of honorable mention here, is a CD or certificate of deposit. This is, again, it can be done through a bank. Now CDs have a time frame affixed to them. The banks want you to keep it locked up for a certain period of time. So it could be 1 month, 3 months, 6 months, 12 months, 5 years, whatever. You keep it locked up. The longer the term that's locked up, the higher they pay you. Now it may not pay you a whole lot more like an online savings account, but they usually pay you a little bit more. Why? Because the banks love to keep your money in prison, don't they? They love to keep it locked up because they want to take your money and go loan it out at a higher interest rate to somebody else. Whether it's a car loan, a mortgage, a credit card, whatever it might be, they love it when you lock your money up. So think about it. If you get a 5-year CD and they pay you 2%, but then they take your money and go loan a 5-year car loan at 5%, they just made more than double the interest off of your money. And that's how the banks make their money, right? So CDs are useful for the banks for that reason. They can be useful to you. We've even put some of our kids' savings accounts that we said, hey, we want them to have it open at a certain age. We've put some money in there before just to kind of give them something that they can see in their little bank account. But it's not money they can touch, because if you do try to touch these before the time's up, they will penalize you interest. It will cost you money. So be very, very careful not to do that. So that's the downside. Now, similar to a CD is number 4, which is called a savings bond. Savings bonds, if you've seen these online before, recently have become a little bit more newsworthy. Why? Because inflation's up, and these are set based on inflation. For example, between the months of May of 2022 and November of 2022, that interest rate is 9.62%. Much, much better than what you get for a CD or your bank savings. But like a CD, it needs to be locked up for at least 1 year. And if you take it out before the 5 years are up, because it's more like a 5-year CD, they will penalize you some interest. They will take some of the money away that they're supposed to pay you. So be careful. But it is somewhat liquid. But if you want money that you can get to quickly, this is not the place, because you've got to keep it locked up for a year. You cannot touch it for a year. They will not allow it. Or at least a CD, they'll allow it. These I bonds, it's not allowed. But if you want to make a higher return and you're planning to let that money sit for at least a year, that could be a good option to be able to make some money. And there's even a slight tax benefit on it too. And here's the cool thing. You can put in $10,000 per year per person. So in my family, we got 8 kids and we got 2 of us as adults. We can legally put in $10,000 per year per family. We can put in $100,000 per year and do it that way. Now, the reason we haven't done these is because of number 5. Number 5 is even better, even if the return is not as high, but I'll share with you how actually the return can be much higher than these savings bonds, okay? All right, so those are savings bonds. So I've said number 1 is bank savings, number 2 is online savings accounts, number 3 are CDs, 4 of those savings bonds. Number 5, the one that I put most of my money in, is what we refer to as infinite banking. Now, infinite banking is just a fancy term for what we use for whole life insurance. Now, this is not just any run-of-the-mill whole life insurance you buy from that fat old insurance agent that you've known since you were, 20 years ago, right? We're not talking about that guy that wears the tie way too short and is always wearing the button-up shirt, the pinstripes and everything. This is the kind of whole life that's done very specific, where it has low cost to create higher rates of return. The great thing is, tax-free, I can make anywhere from at least 4 to 5% a year on my money in there, because it's not just death insurance like you get with term insurance. It's got this cash value or this tax-free savings account inside of it that can grow, and you can use whenever, however you want, if it's designed the right way, which is what our team does. We want to get the max ROI possible on these things. Here's what's awesome about it. Not only is it great because it's safe, it's guaranteed, there's no rules. So it's like a Roth IRA in the way it's taxed, that there's no taxes as it grows and no tax when you pull it out. But here's the cool thing. You don't have to wait till you're 59 and a half, and you don't have all these stupid rules of you can only put in $5,000 or $7,000 or $7,000 a year into it. You actually have the ability to put in more. And here's my favorite part. You can use this money to invest and make money in 2 places at the same time. Yeah, you can make your money 2 places at the same time. It's like having your cake and eating it too. That's actually possible. I've never tried it, but somehow I can have my cake and try to eat it. I got to try that one of these days. But in this case, we know it works. Why? Because when you have this tax-free savings account that's in here, there are not just the insurance companies, but there are banks out there that said, hey, we know this money is guaranteed to never lose money. In fact, usually the guarantee is at least a 3% return. And usually these things are making at least 4 or 5% even after you pay your insurance cost. Well, they know it's guaranteed, it's always going to grow. Banks love to give loans against this money. They'll say, hey, this will be like the collateral we use. This will be the thing that we give the loan against because it's real. It's not like a car that depreciates and loses money. They know it always grows. So they give you really good return, really good interest rates on this. Even right now with rising interest rates, you can still get like a 4% interest rate on this money. But the cool thing is if you're earning 5% on this money within the life insurance, right? You're making 5% on all this money, but you also pay a bank loan 4%. Guess what? You just made 1% extra, and then you could take that money and invest it wherever you want. So if I want to go buy a real estate property and I'm making 10%, and then I also get that 1% spread because I make more money, just like the bank does on me when they go and they take the money out of your CD and use it to loan for an auto loan, like I just explained. You can do the same thing, take the money, make more. I'm making a 1% spread plus the 10%. I'm making 11% instead of just 10. I'm making free money doing the same thing, where if I just use my savings account or checking account to do that type of strategy, I would make nothing on my money. My money would go bye-bye to go into that investment. But now the money's still here in the life insurance and it's here investing at the same time because I got a bank to be able to make the investment for me. That's how you can actually double dip on your money at the same time. All right? Huge. It's awesome. I have many of our clients right now using this all the time. I even had a client use that infinite banking to go buy an office building and then leverage it and go and use it in a way that he was able to get the best interest rate with the bank, even lower than he would have got with the building normally. He leveraged that money, and then a year and a half later, after the building was done and complete, he went to the bank and said, hey, can I have you take the lien off of that, take that loan off of my life insurance and just let the building do it and be the collateral instead? And they said yes. And he did. He's like, yes, this is awesome, because he kept the same terms, the better interest rate than he would have done just buying the building himself. So there's lots of cool ways to use it. And the coolest thing is you can set up on yourself, your spouse, and even your kids. A lot of our clients actually use this instead of getting a 529 college savings plan for that reason. So again, this is not about infinite banking, but when you're looking for savings and you're looking for different ways to do it, this is one of the most creative ways to do it. And so few people are not only not teaching it, but so few people are doing it right where you get the best return possible. So let's go ahead and review what we talked about today. Number one, bank savings account. You can earn 0.nothing%, but at least you can get to it really quick. Number two, online savings account. You can get to it a little bit less quickly, but you at least earn a better return than you get with your bank. Three is a CD, earns a better return, but it is locked up for the same time period. Much like number four, which is the savings bonds you can get through the government. Although it's supposed to be backed by the government, problem is it is locked up for at least a year. But right now, when inflation is high, you can actually make really good returns on that. And then the fifth, but definitely not the least, my favorite, is infinite banking, where you can use whole life insurance to be able to create this tax-free, supercharged savings account for you. I would love to hear in the comments below, what are your favorite types of savings accounts that you use? And if you like this video, check out what are the main differences between checking and savings accounts right now.